Good morning, traders. Today is the 30th of August. My name is Neville Hornsey, market analyst with YouTrading. And today I'm going to talk about the week ahead. We're going to look at an economic calendar, and we're also going to look at the Forex Heat Map as always. So we're going to start with the YouTrading.com Forex Heat Map. And you can see that at the bottom, China's yuan, green across the board, and also the euro. So that's good. The sort of Swiss franc is bearish today. So a bit of a risk sort of on, but the yen doesn't sort of confirm that. It's kind of mixed, and the US dollar is quite strong too. Aussie, Canadian, and New Zealand dollar, again, mixed down the middle. Looking at an economic calendar, we can see that Tuesday, tomorrow, got Chinese MBS manufacturing PMI. Anything over 50 is expansionary, but the consensus and forecast here is for a slight decline. Then we have the Japanese consumer confidence. They're going through some serious lockdowns, but consumer confidence is rising. Wednesday, the Taishin manufacturing PMI is obviously, along with the US ISM manufacturing PMI, is kind of a big deal because this is the second largest economy in the world, and 50 and above is expansionary, and unfortunately they are still declining. If we look at this graph here, you can see that, sort of November 2020 peaked up, but ever since it has been like in a decline. The Chinese sort of economy relies, unfortunately, on the world obviously taking goods off them, and also from stimulus from the authorities. And at the moment, the authorities are kind of clamping down on quite a lot of different industries due to the environmental impacts that these parts of the economy are having. Like going back to another calendar, on Wednesday, we've got the Australian GDP quarter on quarter. That's forecast to decline quite heavily due to ongoing lockdowns due to obviously the coronavirus. And then we have the Opec meetings. OPEC Plus comes in, and they'll probably just reiterate what they've been saying in the past, where they've got their plan for how they're going to increase oil into the markets, but they're going to do it at a sort of slow pace. Then for me, the sort of real focus starts at 1:15 p.m. BST, where we have the ADP non-farm employment change. Obviously, employment is the second part of the dual mandate, but also it's becoming more important for the Fed than, say, the increasing prices and inflation. Then we have the ISM manufacturing PMI, which we're going to discuss a little bit more. And then Friday, the real sort of focus, for me is the non-farm payrolls, and that obviously comes out at 1:30 p.m. and then closely followed by the Ism Services Pmi, which is where we'll discuss the employment within the sort of service industry. So moving along, here we have the US ISM PMI, and you can see that it peaked in March, and since then it has been declining. If we look to the actual report from July, new orders, production, and employment are growing, so that's good for the economy. The Fed would be happy with that bit at the end. Supplier deliveries slowing at a slower rate, but unfortunately there is a backlog growing, so this is inflationary. Raw materials inventories contracting. The materials are in the wrong part of the world. They're on container ships or imports, and they're just not being shipped across. Customers' inventories are too low. They just don't have the actual goods. They haven't received the bits, and this is leading to prices increasing on the actual materials that companies do have. They're having to put the prices up because of the demand. Exports and imports are growing, and that's to do with mainly the imports, because we can see here in the United States balance of trade, the US is becoming more and more an importer rather than an exporter. All right, going to prices, total manufacturing industries, the PPIs, you can see that prices are just skyrocketing since March, April 2020. And if we just sort of drill down to a few different parts of the industry, we had wood, the sort of lumber futures, you might remember, were going through the roof, and they've come down, and you can see that here the PPIs are sort of plateauing. They haven't sort of started to fall really, but they are kind of pre-pandemic levels. Here we have industrial machinery manufacturing PPI, and you can see that this particular chart is just almost exponential now. It was a steady growth, and now it's just almost like vertical. Whereas semiconductors, the long-term trend is to the downside. We did have, kind of a steep decline, like a deceleration, if you like, between March 2020 and October 2020. And then we had like a slight pickup, but then even that's rolling over. Yeah, there is a semiconductor shortage. That's because the suppliers can't meet the demand. And there was obviously an uptick in prices, but as they sort of bring more factories online and start producing more, and COVID sort of eases, hopefully, this long-term trend in semiconductor and electronic components will continue to the downside. If we look at plastic materials and resin manufacturing, again, another sort of parabolic move to the upside. It doesn't look like that's going to be coming down anytime soon. So you can think white goods, cars, anything with a plastic in it, that's going to be more expensive in the future. And then if we go to the next thing, so the next part of the sort of focus really for me is the United States ADP employment change. Last sort of month, we had a big decline, a bit of a shock. Everybody was kind of expecting a lot more than that, like nearer to the sort of 600-700 mark. And unfortunately, we had a big decline. That didn't really have much bearing on the NFP number. The NFP was then expected to be quite low. It came in not only higher than the previous month, but the previous month got revised higher. So that's good. The Fed are obviously looking for employment to continue rising. But, the real sort of measure, if you like, is the actual participation rate. We need to get that up for the Fed to feel that the economy is in a good place. So come Friday, we also have the Services Pmi. And if you see here, part of the Service Pmi data is this employment bit. So July, obviously increasing. June was like a lot worse really than July. So we had a 4.5% change. The direction is growing, so that's good. And it had been contracting, so it's growing. And I'm hoping, for everyone's sake, that it goes from from contracting to getting faster rather than slowing down again. Because we need to see definitely a few months, if not a year's worth of trend going higher. Right, moving on to the active trader platform. I'll start with oil. So we mentioned that we've got the Opec meeting this month. It's probably going to be again online rather than in real life. But we had a bounce off the 200-day EMA. We've got back above the 20 and the 50. They're both starting to curl higher. There is this overhang of resistance from this sort of trend line. But, we got across the sort of swing high here, and, $74 to $75 a barrel is quite easily sort of, could be achieved just up to this sort of swing high here, test that. Obviously, if they say they're going to supply over and above what they've already agreed, then the price of oil should come down. And if for whatever reason there's a demand shock, then that will come down. But if there's a supply shock in some way, we are having sort of big storms in America, then this will just continue going higher. The dollar index, obviously, this has been pushed around by FOMC meeting minutes, the expectations of raising rates. Last Friday, they decided to keep everything as is. So September is now the next point at time when they could change policy. And, currently the reaction was to the downside, and, it's bank holiday day today. So, we're waiting for the Americans to come in to work to see if they can pump the dollar up higher, or if they're just going to come back down, test the 50 EMA, or maybe even the 200 EMA. Euro dollar, seeing this sort of falling wedge. If going by the closing prices, just put a couple of trend lines above and below. It's sort of working its way lower, starting to make a new swing high. So we had a high, a low, now we've got a higher high. If we were to get a higher low and then another high, then this target was from a falling wedge, and you can expect to sort of see one spot 2-1 in the future. If this just becomes like a channel to the downside, it could grind a lot lower, take out these double bottoms, and then come up and test what was resistance here. So 1.18 is currently the magnet, and obviously the line in the sand for the bulls or the bears, in my opinion. But currently, this falling wedge, probabilities are that it goes a little bit higher. So I'm thinking maybe up to the 1.19, and to see where the dollar goes from there. S&P 500 basically grinding higher, nowhere near the 200 period moving average now. The 20 and the 50 have become more important. So if you go to the daily, here you can see 20 and 50 on the daily, really important. 4 hourly, just a good indication of where to buy the dip. And at the moment, I've got targets to the upside all the way up to sort of around 4,535. If we get this sort of push, and then it's like if we can break out of this little range here, I just think we get another push equal to this big impulsive green candle. So that's how I get to TP2. On Friday, Fed Chair Powell was speaking at Jackson Hole. They didn't raise the rates. They didn't tighten monetary policy or QE. And this is the reaction in the 20-year bonds. As you can see, everything's going higher. And the same for gold. We had a big push up in gold. And for me, gold at certain points in time is an inflation hedge. If people are worried about inflation rising too quickly, they'll buy into gold. For me, we're looking to get up to the top of this channel, and then a descending channel in my mind breaks. As you can see here, I've had this like smaller descending channel, and it's broken to the upside. So this is a long-term play to the upside, and we're above some key resistance now, which should become key support. All right, that's kind of it for the week ahead. For me, Wednesday is the sort of hump day and the sort of start of the sort of main economic calendar. Monday and Tuesday are going to be quite quiet, and then Friday would be another sort of volatile day. All right, take care, and I'll speak to you later.